Welcome to the Hey Docs podcast with your host, Jill Allen. Today I am joined by Brittany Frazier, a financial advisor with Cain Watters and a powerful advocate for helping women take charge of their financial futures. We're diving into a topic that doesn't get nearly enough attention: how women are uniquely positioned to shape the future of wealth. From investment strategies to confidence gaps, this conversation is all about equipping you with the knowledge and questions you need to build lasting wealth. Let's get started. Hey, docs. If you want to have a great business, the right practice management software is essential. But some can be slow, outdated, and lacking good support. That's why I recommend Greyfinch to all orthodontists. It's the fastest, most reliable, and most secure platform to grow your business and improve your efficiency. It's completely web-based, so you can run your entire practice anywhere and from any device with no servers, no downloads, or hidden fees. They even have the most helpful and responsive support team around. Right now, Greyfinch is giving a $500 discount to our listeners. Visit greyfinch.com/Jill Allen to learn more and see why it's one of the fastest growing providers in America. Brittany, I am so excited to have you here on Hey Docs. Thanks for being here today.
Hi, Jill. Thank you so much for having me. I can't wait for this. I'm so excited.
Yes, me too. I know our topic today is going to be great. I've been waiting to get into this with you. So I am just wondering, since you have not been on the podcast before and our guests do not know, exactly who you are, would you mind just taking a moment, talking to us a little bit about yourself and what you do at Cain Watters?
Absolutely. I am a financial planner and CPA in Dallas, Texas at Cain Watters, but I first started off my career in the Big Four public accounting working for PwC. I did a little bit of audit but mostly tax work there. And I did that for about 5 years in New York City and then moved back to Dallas where I went to school. And then about 12 years ago, I moved over to Cain Watters because I really I was doing more tax compliance work, mostly working for businesses. And I wasn't feeling that real personal connection in helping someone. And so a CFO of a business isn't really super excited when you save them taxes, but a person is, right? So when it's their personal money. So anyway, so I found Cain Watters and I love the comprehensive approach they took to financial planning and investing. And so I started over here about 12 years ago, and mostly Cain Watters has historically been famous for working with dentists for everything comprehensive financial planning. And so over the past 40 years, we've built up our client base based on dentists, right? So highly referral based, kind of friends sending their friends and practice owners. And we've evolved from that to being able to really help anyone, our kind of people within our dentists network. So their family members, their friends, they may or may not own a business. So it's associates and practices, which has been really great. We can just expand our reach even farther to help more with that financial literacy and kind of making them feel secure in their finances. So that's a little bit about kind of me and what we do here at Cain Watters. I am also a mother. I have 3 kiddos. And so that keeps me busy as well. As a little bit as I've evolved through here, I started off as an associate and built my way up, built my own team. And I was a working mother trying to build a family and also progress in my career. So about 4 years ago, I started a women in financial planning group. And all that was to build up a community of people that are similar to me and a similar kind of either have been through or are going through similar things or potentially will go through, to just build up that community a little bit. And really the primary focus of it was to support each other and also to develop our firm's females into leaders. So we've done a series of things and training programs and education programs. We've done teaching financial literacy to female-centric organizations in our nonprofit organizations in our community through our charitable foundation, the 3-to-1 Foundation. So lots of stuff there. And as I started doing that, and that kind of was the genesis of the kind of whole women in financial planning, is I was going through it, so I wanted to have that. And I started realizing in the planning room actually is what made me realize there are a lot of innate differences in men and women. And it's something that we we all probably know this by instinct, but it seems a little bit taboo sometimes to talk about gender and how are we different, right? And I wanted to look at it through a lens of, okay, what are these differences and how do they apply to real life? So really it's just at the core of how are we different? And then how do we work together to achieve a similar result? And there's so many good things about the way we are as by nature as women and the way men are by nature. So how is there a good marrying in the middle? So I was noticing that I really approached the solutions to problems very differently than many of my male counterparts.
Sure.
And it's so funny because I'm not talking about stereotypes. Sometimes when I talk about this around here, some of the guys are even like, oh, I can't talk about that. I'm not talking about that. And I'm like, this isn't me just stereotyping. I was seeing these things. And then, so I spent a lot of time actually researching and finding data to support what my instincts were. And the data and looking at that research made me more intrigued. I think really this is important in the world as we change. There is something called there's a demographic shift in our world and where the wealth will transfer, what we call the great wealth transfer. And so I felt it was really important. And part of the great wealth transfer is, and we'll talk a little bit about this in a minute, but women will be a big part of that. And so I thought it was important to understand, okay, how are we different than our male counterparts? What are the differences and how do we embrace that? And how do we work together to meet a common goal? So that's a little bit about how I started out and then how I ended up in this niche doing this research and kind of started looking into this a little bit more.
I love it. And I know you and I have talked about this before. And one of the reasons I wanted you on the podcast was because I feel like this is just an area that is not talked a lot about women and wealth and what do we do with it and how maybe the way we look at things or the way we do things could be different than our male counterparts and whatnot. And I thought when we were talking prior to this, podcast and just talking about what you have been doing in that research and really being able to dive into that and pull that apart and then say, hey, these are things, especially as women entrepreneurs and women business owners and this, that, and the other, that we should at least be paying attention to as we are preparing for our future and what we will be doing as we get to a point of retirement and all of those different things. And especially just that strategy of wealth management. How is it done? And are there maybe things that we need to be thinking about that could be a tad bit different than maybe other people in our industry? So I do want to just first start talking about, you already said it, the great wealth transfer and what that means. What's the difference between what that means for women versus men? And what should we as business owners be paying attention to?
Yeah. So if the great wealth transfer is a very fancy term for just a shift of wealth. And it is estimated that about $84 trillion is going to shift hands over the next 20 years. And really, there are going to be two shifts. The shifts are going to be, the first is a generational shift. So our parents and grandparents, the baby boomers and their older generations are leaving money to their children, the millennials, the Gen Zs and below. Okay.
Yep.
So that's the first shift. This is also the largest generational wealth shift in history, wealth transfer in history, which is really important. It's already happening, right?
Yeah.
But it's going to be at its peak. Women are a huge piece of this. So of that, women are going to are the majority of the inheritors of that wealth. So I have some data. Again, I like data.
I love it too. Bring it on.
I'm a CPA. I'm sorry, I can't help myself. So by 2030, which is in 5 years, women will control 2/3 of the wealth in the US, which is humongous. That is, to me, just a profound fact in and of itself. Mm-hmm. So women, why is that important? And why is that actually? And it's because women live longer than men. We live on average 6 years longer than our husbands. We are going to outlive the money. We're going to outlive our parents, and then we're going to outlive our husbands. I joke with my husband, no, I will not live up to that. You will die after me. I want to die first, because it's sad. And again, nobody wants to talk. I'm talking about gender and death apparently today. Nobody wants to talk about those things, but they're really important. And honestly, this is something that it's generational too. Our parents didn't talk about gender, and our parents don't want to talk about money. It's just uncomfortable. It's just not, their parents definitely didn't talk about it. They're probably more likely to talk about it than their parents did. So I think it's something that I've found, and there's many in the industry, not enough, but many in the industry who have seen this. And we see that we need to connect with our next gen, our women and kids, younger kids, and of our clients, of our advisors and their kids. And so understanding that, we need to understand how they think too, right? Which may be different than how we do. So not just are women inheriting the wealth, though, is that we're also creating and generating wealth. To your point, more women are business owners than they ever have been. They're earning much higher incomes, obviously, than they ever have been. And they're holding more leadership roles in corporate America, S&P 500, Fortune 500 companies, sitting on boards, CEOs. That's really important. And it's good. It's just more validation for this discussion, and it's what's pushing us towards this. Whether or not you like her, she's an amazing human, Taylor Swift. She literally took a male dominated industry. Let's take the NFL. And she brought over $1 billion in one season to the NFL. $1 billion, which is amazing. And you can say, oh, she's terrible with relationships or she's whatever she is, but she's an amazing person. And I wasn't team Taylor Swift from the beginning, but I've just watched what she's done. And I'm like, she really is an amazing woman. Anyway, she's one example of that happening in our world. And so why I think this is so important is because as women, my research has also shown that we are a lot less confident and more fearful of money than our male counterparts. So to me, why is that? We need to dig into that because, and the good thing is we have the ability to teach that, right? So that's why we preach education. We have a lot of mutual clients. How we approach things at Cain Watters is we always are rooted in education. And so we believe that education can create that confidence. And so one of the, again, back to my data, but one of the data points I thought was interesting is 34% of women feel comfortable with making financial decisions as opposed to 49% of men. So there's a 15% gap there. So what I want to do is give them that confidence to make financial decisions, which I believe is more likely to make women successful with money.
Yeah, I love that. And again, I just really appreciate that you have taken a deep dive into this and are educating women out there on this, because I would agree with you. I think that it is just not something that a lot of focus has been put on. And yes, there are different business coaches, financial business coaches out there that focus on women a little bit more. But I think just in general, we just need more education. And so that leads me to a question of let's talk about investing for a minute and just maybe the differences in in women investing versus men investing. And is there any evidence to, I don't know, like which strategy performs better, or should we be coming at it differently than our male counterparts?
Yeah, absolutely. Again, some of these are generalizations. I'm not going to say every woman is this way, every man is this way, because I do this all day long. And sometimes it's different, it's flipped. But I think I think a lot of this shows the differences between how we, like our genetics, like we are born this way. It is innate to us. Okay. Some of this research is with we have one of our directors of wealth management here. She's a female. And at our annual meeting last year, we did a breakout session on women at the helm and, how women invest. And so she dove a lot into how this is actually some of it's based on our hormones, right? Which is amazing. And it makes a lot of sense. But when she looked at it, she showed it to me. I was like, I never saw that, but that just makes a lot of sense. So I think the first thing is our reason for investing. Women tend to invest for security and to achieve a specific goal. So let's say I'm going to save to retire by 60, or I'm going to save for my child's wedding or college or whatever it is. Okay. Whereas a man probably has those same goals, but men tend to prioritize performance and returns. Okay. I call it, when I'm looking at this, a goals-based approach that women tend to adopt versus a results-oriented approach versus is what a man is going to counter. Again, generalizations, but for the most part, this is what I found. So when I'm looking at a woman's kind of a goals-based approach in general, again, the focus is achieving a personal financial goal. So buying a home, that education, and we are going to customize an investment strategy and a financial plan based on you, on the priorities and timelines of that. Okay. So the mindset is, am I on track, right, to meet that goal? Whereas a results driven approach can tend to be the focus of maximizing returns. How did I do compared to the S&P 500? Is this the highest performance? This person got this return on this. How come I didn't get that? So it's the mindset of how much did I make compared to the market? So it's that goals based approach, which kind of prioritizes personal success, and a results driven approach, which is going to maybe prioritize market success or some other benchmark success. So that's the reason for investing, and then the approach at which we take it. We can also dig into kind of, when we look at money and investing in particular, risk tolerance. I joke that a man, and again, this is a generalization, but I have found it to be true for the most part. A man is going to be like, all right, we're going on this journey and we're going to just jump off the cliff. And a woman is going to be so the risk tolerance tends to be higher, a higher propensity to invest in something that's maybe more risky or volatile, or a growth stock or a tech stock or something like that. Whereas a woman is going to follow the journey, follow the map on that journey to the destination, because again, that end point on the map is the goal, right? So slow and steady winning the race there. So maybe there's going to be less risk, less volatility along the way, right? The other thing too on that is, I think women, this is interesting because I'm not so sure this is in a socially, I'm not sure this is true, at least for myself. But when it comes to investing, women tend to care less about fear of missing out, and they're more inclined to just follow the plan. Some of that, I think, may be because of time. I feel like there's a lot of things that as women we are juggling. And so we just got to pick something. We got to stick to it, right? Yep. We're going to just have to trust that it exists. And again, I've just found that to be true with me. So it makes a lot of sense. The other thing is just when a lot of this kind of marries up with what I've just said before, but women do tend to look at long-term growth and diversification. So not putting all of their money in Nvidia or whatever it is and staying invested in it for the long haul. I did find in my research that women tend to take a little bit longer to make a decision, which again, probably rings true to me. But once they do, they tend to stick to it. Versus a man that tends to, as that reference before, is just jump off the cliff and we'll get there eventually, but it might be bumpy along the way. And then the last piece of the big differences that I see are just that confidence and decision-making that I talked about before. Men do tend to have a lot higher confidence to jump in. And I think that is actually a real benefit, because sometimes that hesitation can be an issue when women look at investing, and, that likelihood of I'll just hold off, or I don't know it, so I'm not going to do it, which could potentially lead to underinvesting. But you asked a question earlier a little bit about which one is better, not one is better. I actually think it's about marrying up to both approaches, because we can't be extremely risk averse and one way, but we also can't just jump off the cliff all the time. So it's a marrying of the middle and understanding what do we need to accomplish. But I will say that my research showed, which did surprise me a lot, and I think some people still don't believe me, but women do outperform men by anywhere between 0.4 and 1%, depending on which study you look at. We just won't tell the guys that. So It's fine. It's fine. It's totally fine. It's fine. But yeah, it's very interesting to me. So again, it's just about embracing both styles and realizing that we as women may look at things differently than our husbands do, or our parents did. And that's completely okay. So yeah, that's a little bit about that.
Well, and I would think, just a thought that came to mind as you were talking about that too, is I would think, I'm a Gen X, but I would think Gen X and all the generations under us definitely were coming from a different just generation, and where I think we approach things more as co-investors, where I think previous generations, it really was, I would say I can look at my parents and other people that I know in the baby boomer generation, and a lot of times it was very much male driven. The wife, just whatever the husband did, that was the way it was done. And so I guess my thought to this is, as anybody who's listening, even though we're talking a lot about women, I think what's an important point to bring up is, even if you are sitting there as a couple meeting with your advisor, both of you are going to come at it potentially with different views, and depending upon the advisor that you have, they may also, if they haven't been really paying attention to maybe how a woman may view things, tend to minimize that strategy a little bit. And so that kind of just leads me into my thought. That was my point, that I think we've got to be very aware of that, especially knowing that I think many couples come to the table now with both women are doing well, are holding very important positions. A lot of times we do have dual incomes, all of those things that we wouldn't have had in previous generations potentially. But it leads me to, when you are starting to think, hey, I'm going to talk to an advisor. Hey, I feel like this is bigger than just my husband and I trying to figure out what should we do here.
Yeah.
What can you give us some advice on maybe how, from a woman's perspective or from a couple perspective, how can you vet the advisor that you're going to be working with in making sure that maybe they're taking into consideration that we may have two people with potentially different investment strategies, and just because one is different than that than the other, that it doesn't mean that they both can't work, especially if in the long run they could potentially end up both paying off.
Absolutely. Jill, I do this all day long, many days a week. And so to your point, I see it. And so that's what kind of inspired me to do this, is because, or to dig into this a little bit deeper, because I was seeing it. And what I found was that most of the time, even if a husband and a wife or whatever the dynamic is, if they had different strategies on how to get there, where they wanted to get was really very similar. So it was, so to your question specifically, what are you going to think about when you're looking at, okay, should I work with an advisor? What should I ask the advisor? How do I even start this process? Is, what are your goals? And then what values are critical to you to achieve those goals? And when I'm talking with clients, like I think any advisor should be defining short-term, middle-term, and longer-term goals. Okay. And so we may have to sacrifice the longer term to accomplish the shorter term and the middle term. But at some point, we have to have a plan to attack the longer term. And so I think being dynamic with that is critical, because in my experience, if you're just trying to push that long term and, oh, you need to do this, you can miss the boat, right? On so many things, and you can lose a person, and you really don't have your financial plan aligned with the individual or the couple's goals. And I think not long term is not just the only goal, I think is something that we're missing out on a lot. Not at Cain Watters, of course, but many advisors do miss that. So I think that's the first thing, is defining goals, and not just long term, but like shorter term and middle term as well. And then I think the question is, how, based on these goals that we have discussed with you today, right? How are you going to align my financial plan, or how are we going to align my financial plan with those goals in that timeline? So to me, this is bringing up two huge topics. It's really investing with a purpose. And when I say investing with a purpose, I really am talking about several things, but the two core things I'm talking about is, what is my time horizon? What am I trying to accomplish? And this is not just investing in the market, right? This is like, from a spending standpoint, this is really looking at all money decisions, but specifically with investing, what is my time horizon? And what is my risk tolerance for accomplishing this? So let's say I want to save money for a down payment for a lake house, and that's going to be in the next 3 years. Okay. That does not need to be invested in a full growth strategy, risk tolerance of 90 out of 100. Like, that is not an appropriate investment for something that we want to have that money liquid in 3 to 5 years. Okay. Yeah. Now, if we want that money within the next 3 to 5 years, it needs to be in some sort of more conservative allocation, so that we know when we're ready, it's there. Okay. And we haven't liquidated at losses, right? We haven't made losses that we have to capitalize on or have to liquidate, right? To get that money. So it's matching up time horizon and risk tolerance. So when I look at buckets of money, not all of your money should be in one bucket. Not all of your money should be in cash. Not all of your money should be in stocks. Not all of your money should be in bonds. And even within that, it shouldn't all be in one type of stock or one stock or anything like that. So it's looking at each individual specific account or purpose of what we're trying to accomplish, making sure that is appropriate for that goal, and then looking at the portfolio as a whole and making sure that makes sense from a long-term standpoint. So it's matching up that your financial plan driven by your time horizon and your risk tolerance, and making sure you're in the appropriate things to achieve those goals.
Yeah, I love that. I think that's really great advice.
Hey docs, on this podcast, I talk about a lot of different ways you can set your practice apart. But here's one that might surprise you. Maybe you haven't thought about it before, but the equipment you use can make a big difference, not just for the patient experience, but for you and your team too. That's why I want to let you know about a new line of orthodontic equipment from ADEC. I visited their headquarters in Oregon earlier this year to take a sneak peek for myself, and I have to say, I was impressed. ADEC has manufactured award-winning dental equipment for 60 plus years, and they're bringing that same level of excellence to ortho. From comfortable, compact patient chairs to a versatile workstation and delivery to ergonomic dental stools, ADEC orthodontic equipment is designed for a smooth and easy workflow. Day after day, patient after patient, see the difference it can make for your practice. Click the link in our show notes to learn more about ADEC Orthodontic Solutions. Hey docs, let's talk about Smile Suite, because it's not just another scheduling system. It's a game changer in the world of new patient management. And as a proud Smile Suite partner, I've witnessed the incredible impact it has on practices of all sizes. Smile Suite means your new patient calls and web leads are expertly handled 7 days a week, even during nights and weekends. And they offer top-notch customizable presentation software and seamless post-consultation follow-up. It's like having a secret weapon for your practice's success. Curious? Dive into the revolution at GetSmileSuite.com. And don't forget to mention Hey Docs to unlock some extra goodies. Elevate your practice with Smile Suite, because every smile deserves a suite of excellence.
And just something, I think it can sound very scary thinking about talking to somebody. And I can say, I think it's important that just being able to advocate for yourself and put everything, be as open as you can with your advisor and letting them know, like you just said, what those goals are, because your advisor may think your goal is this, but if you never maybe talk about some of the short-term things or whatnot, it could really make it not feel like it's going to be a good fit as you're moving along.
Yeah, and actually, Jill, that brings up a good point. You and I have just assumed that people have advisors, right? And that may not be even the case. So let's take a step back for a second and understand, what is the importance of an advisor? And so what is an advisor even doing? A lot of people say, many people say, not our clients, of course, but many people say, I can just do this on my own, right? And so I always take a step back and say, okay, what's the importance of an advisor? And to me, it's really 4 things. It's making sure you are, again, all of this with the overarching goals-based approach, okay, and investing with a purpose, but making sure at a more granular level, you have the right asset allocation, the right ratios of stocks and bonds, that you're diversified within those asset classes and then within markets. So public market versus private equity, private investment. So private equity, private credit, real estate, those kinds of things. So asset allocation, diversification. This next one is often missed, and this is what we refer to as rebalancing. So we start off at those appropriate ratios within our diversified allocations. At the end of the year, or at the end of 2 years or 3 years, or we're in different ratios because something's done really well, something's not done really well. And so the relative ratios change. So we need to be rebalancing that. And of course, in a tax efficient way to make sure that we can still achieve, again, the different buckets that are appropriate for each time horizon. So making sure that so that is the biggest thing there. And then the last piece, which to me is the biggest benefit of an advisor, is the goals-based investing piece, is that we are tuning out all the noise and we are removing all cognitive, emotional biases, any sort of noise, media, our friend talking on the golf course, that hot stop. And we're removing all of that, which I mean, it's super fun to talk about the 20% return, but nobody knows what that really means, right? So it's like, what are we talking about here? Is that true? How much is that? So to me, it's removing all of that stuff. And the real value in the advisor is making sure is behavior control, right? Is making sure that once we've set the goals, once we've defined them based on the person and the couple or whoever it is that we're trying to plan for, is keeping us on track. And so making sure that we have all four of those things is really the true value of an advisor. And that's what your advisor really should be doing if you have one. And if you don't, then, that's what you're missing out on. And a lot of people think I can do this myself, but more often than not, biases come in and we don't even know that they're there. And we all have them. It's just training ourselves to not succumb to them.
Yeah, absolutely. So let's talk just a little bit going back to women in investing. And is there, when you're looking at this with women specifically, can you talk just a little bit more about the mindset blocks maybe that keep women from investing sooner or more confidently? You've talked about our strategy, but are there things that you can expand on and maybe you can talk to? Here are some of the conversations I have that kind of help women move forward with investing if they're hesitant
Absolutely.
to move in that direction.
Yeah, absolutely. I think this goes back to the concept I talked about earlier, is the lack of confidence and the lack of true financial education. The studies did show that women are not as financially educated as men are. So it is our human nature to not to underinvest, right? Because we don't know it. And then also, to compound on top of that, it's our innate aversion to risk that I believe that many women are born with, that can also prevent us from wanting to get in or optimize our strategy. When I'm doing my planning, I feel it's really important. And this is kind of part of the topic that I like to talk about, is just being really intentional with having the conversations about, okay, I understand and I understand how you are, but here's the path that we've outlined to get you there. But in order to do that, you have to connect. So you have to understand who you're talking to. That's not to say for example, I have one female client who is she has a high tolerance for risk, and it's okay because that's appropriate for her and whatever she's trying to accomplish. And for the things that she needs the more liquidity and less volatility for, absolutely, we have a bucket of money that's for. So I'm not suggesting this is all women or all men, as I've said before, but I think it's important to connect with whomever you're speaking to, a man or a woman, and meet them where they are, but while still accomplishing that long term. And again, I touched on this before, but aside from my passion for working with people, my biggest thing is teaching that financial literacy and that financial education, because I believe, and at Cain Watters, Daryl started the firm over 40 years ago, and he was founded in education. And so he believed that, and I still strongly believe that education is, if you can explain why you're doing something to someone or why you've recommended something to someone, they're much more likely to do it. So what you're doing is giving them the tools they need to build the confidence, but you're also making them engaged and understand why you're doing, so they're much more likely to take your advice. So as advisors, I think we do that really well, and we'll continue to do that really well. So it's just one of the things that I've talked about as well. So I think in a market like today, it can be really scary for anybody to try to invest or to try to really even spend money or make any big decisions, buy a house, because people are scared of interest rates or whatever it is. And I break it down and I say, okay, everybody's talking about how interest rates are still bad. And yes, it's not great. However, from an economic standpoint, from a growth standpoint, however, what we also need to understand is, can I afford this mortgage payment? Does it fit with my financial plan? And if it does, then maybe it's okay that our interest rate is 2% higher than it would have been 3 years ago. That's probably okay. And so it can be scary sometimes, but again, bringing it back to the goals and bringing it back to what are we trying to do here? And if we've looked at things intentionally, then maybe it's not as big of a deal as we think it is. And we can get over some of those tendencies.
Yeah, I really appreciate, because that was going to be the point that I was going to finish on, is I really appreciate you pointing that out, because I do think that a lot of people almost get paralyzed by what is happening in just within our world. And you see these big headlines and the uncertainty of, like you said, the interest rate. But I think I can tell you 54 years into this world, and I have seen interest rates all over the place. And if you think about all the people who, when interest rates were up at 9% and still were buying houses, and as they dropped and refinanced, and they still have the equity in that property and all those things. So I just think we can't be driven by fear. That things, just like you were talking about resetting with investing, things are always resetting. And I think to think we're just going to go throw our money old school, not that this really happens, but throw our money under the mattress, or keep it in the savings account that is safe but absolutely making no interest. Maybe you make a buck a year or something on your interest, something crazy like that. I think that is the beauty of having an advisor, is that you are able to lean on them and their expertise and what they have seen, and then maybe go into it with a little bit more confidence to say, yeah, this isn't as crazy as it sounds. If we look at the historical data here, like when the markets are up and down as a whole, when you look at it, when you take a step back and you're like, okay, that's not as crazy, long term as it is when you're riding it month to month, when you're in the turbulence of it.
Jill, that's such a good point, because I was actually, one of the talking points that I had too was what we don't want to do is, specifically when it comes to investing, similar to the mortgage discussion, when it comes to investing our money, if we have the money to invest and we know what we're going to invest in and what is our strategy, okay, what are we trying to accomplish with that investing with a purpose kind of mindset, we do not want to try to time the market, because in order to do that, we have to pick the exact right time to be at the bottom and to get in, and then the right exact time to get out. And we're just not going to do that. The odds are very unlikely that we're going to hit it big, which we might, but in our world, we are not going to invest based on we might hit it big. It's not like we're not playing roulette. Okay. We're just not. And all of this, there's tons of studies showing timing the market versus time in the market. So you don't want to time it, because you can't, right? Yep. And what metrics are you looking at too, when it gets to what dollar amount, and then what are you looking at, and when it gets back up? So we want to spend time in the market, which is what you just referred to, is when you look at long-term returns, we want to understand, okay, as long as I'm positioned appropriately for the time horizon, it doesn't really matter if I go in today or in 2 months or in 5 months. So we always tend to say, if you've got the plan and you know what you're going to do, it's just time to do it.
Yeah. Just take a step, move forward, and it'll be all right. Yeah, that's great. Brittany, I know we could just keep going here, and I'd love to have you.
I love talking to you. Thank you. This is so much fun. This is great.
Yeah. So if somebody wants to get a hold of you, if I've got one of my female docs that are out there listening, are like, oh, I just feel like I would feel good to just have a woman in my court helping me figure things out. What's going to be, males too, of course, but
anybody, yes.
Especially my female docs out there. What's going to be the best way to get a hold of you, to find out more about Cain Watters, just in general? Can you give us that information?
Absolutely. Yes. So www.cainwatters.com/contact. And then just put a quick note in there where you heard about us, and you'll get connected with our team. And potentially, if you'd like to talk with me, I can specifically talk with you. Or if you, again, to your point, Jill, you and I share many common clients, many of which are awesome men as well. Yep. So we absolutely can help. And we work with tons and tons of orthodontists in the area, and actually in all 50 states. And so we would love to help you wherever you guys are in your financial journey. There is likely a place that we can help add value to you to help you get to your goals. So please reach out to us.
Yeah, thanks. All right, Britt, the way I like to finish this up is with a nice speed round. Are you ready for some speed round questions?
All right, let's do this.
Okay. What is one business trend you think more people should be paying attention to?
This is actually really easy. It's corporate culture. To me, I'll use a technical term real quick. Staffing costs are absolutely kind of crazy. Wage inflation in all businesses, small businesses, large businesses, anything is a huge deal. So turnover and all of those things that we need to combat, businesses really can flourish by having a strong purpose-driven culture that people want to stay a part of, because at some point you're going to become priced out. You're not going to be able to raise people as much as you need to. So you have to find other ways to get them to stick around and to help them grow as individuals so that they can help you grow your business. So I always say, grow the individual to help you grow your business.
Yeah. Great advice. Great advice. What is the
Thank you.
most unexpected lesson you've learned in your career?
Yes, this is also a good one. I thought about this and I think listen first and then talk. Sometimes the most profound ideas come from people who haven't really said much and then chime in at the end because they've absorbed everything that's happening. I had a partner and mentor say something to me about this recently, and it just hit me. I said, you know what? This is profound. And I've listened to a lot of the people that I hear that have really good things to say. And I'm like, you know what? They don't say a whole lot, but when they do, it's really good. It's really good, which for me as a talker, as you can tell right now, is very hard. But I think this is a great skill in life as well. When you're talking to a spouse or a child or anything, listen first and then talk.
Yeah. No, that's great. All right. And then last question. If you could give your younger self one piece of career advice, what would it be?
Okay, this one, as a control freak, this is also very hard for me, but delegate. I'm just very into the things. So I'm delegate, which is difficult for many of us type A's, but you really, as you grow in your career and you're doing more things and you're needed in different places, it is impossible to do everything. So you will have to delegate. So one of my clients told me about 5 years ago, if someone can do something 80% as well as you can do it, let them do it. And I've adopted that mindset. Sometimes I've taken the 70% as well. And I'm like, you know what, just go, or 90%, depending on what the thing is. And so that's a big one. Delegate. I think that's really important.
I could not agree with you more on that one. And that is a hard one of coming also as one of those personalities that just, I can just do it faster, quicker, better. But honestly, you become your own roadblock and you get in the way of your own growth if you cannot do that. So I love that. Brittany, it's been wonderful having you on Hey Docs. Thank you so much for this amazing information. And I look forward to having you on next time. Thank you.
Oh, thanks so much, Jill. Appreciate you.
Yep. All right. Thanks.